Oh, happy holidays.
Whew.
It's here, Chris.
It's a marathon, isn't it, Tom?
It is. My eyes are watered. I've been rubbing them. I mean, we're only in the middle of the month, and yet it just, man, the ebb and flow over here at this house is wake up late and go to sleep even later. I mean, last night, we had it's just starting. It's just starting. It's like they have 8 days of Hanukkah. We have 15 days of Italian Christmas going on over here, probably even more. Someone said to me, "What's the occasion?" And I said, it's Wednesday." That's
Mm.
that's kind of what's going on over here. I mean, man, I was up till 3 o'clock last night. All the nephews decided to come over and start baking cookies. Why can't they bake cookies at 6 o'clock in the evening or 7, like normal people? How come they got to come over and bake cookies at 11 p.m.? And then at 2 a.m., the smoke coming out of my house isn't coming from the chimney. It's coming from the double oven because somebody forgot to set the timer. And the tall house cookies are now, tall black cookies.
Yeah,
We got to
no.
do it again. That's
I
that's what's going on in my house, my friend.
I remember those days, the old Italian Christmas celebrations. And as you said, somebody usually ends up drunk in front of the upright piano at 2 o'clock in the morning, and the bottles of Chianti, because they still drink that, are going
Oh, no,
around.
it's
Tom,
grappa, and I've
yeah,
got it.
I'm,
It's grappa. I got a couple bottles of grappa,
yep.
and we have the open piano, but usually everybody moves over to the Sing Tricks, that karaoke machine,
Yep.
and then that's going to end up being that's going to be used. I know that's happening in the next couple of days. Someone's going to see that, turn it on, and there's another night that I'm going to lose sleep. But anyway, it's not about me and the lack of sleep that I
No.
have. It's not about you. It's about the fact that we're in the last 2 weeks of this year, and we're going to talk about, folks. Well, you know what? We should probably talk about the Fed's latest decision that just happened. But we want to also do a quick little review, kind of a year in review. What did we get right? What did we get wrong? And then I want to end this podcast, which is going to be the last one that we're doing for this year. I want to end this podcast talking a little bit about 2024. So let's start out with Jerome Powell and the Fed decision. What do you think, CJ?
I think the market got an early Christmas present, Tom. We saw, let's rewind it a little bit. We saw CPI and PPI this week, right before the Fed, right? So a
Yeah.
couple of pretty important numbers. CPI, well, you know what? Everybody's been talking about how it was going to be harder for rates or inflation to go lower, and that's what we got in that CPI report. The two things that stood out: it's still expensive to buy a car. Which
Yeah.
ironically, I just got another email from the local Toyota dealership begging me to give them my 2-year-old Tacoma in exchange for a brand new one. Second is housing,
Yeah.
specifically apartments. Apartments are still outlandishly expensive, and I think we
They
all
are.
know that.
They
And
are. I mean, for me, thank God I don't have to rent an apartment.
right, same
I
here.
don't know how people do it as far as new cars. My truck's ready. I just got a phone
Oh,
call
nice.
from the Ram dealership. The truck is ready, and it's being shipped. And of course, they're gonna want me to close on that thing by the end of the year because they
For
want to
the
book
end of the
that sale.
year.
But I mean,
Right.
people want to know, what's Tom Gentile drive? I don't drive Ferraris. I don't drive Lamborghinis. I got an F. I got a few cars, but the one my wife likes, which is the most reliable, is the Ram 1500. Problem with it is you can't tow anything with it, and
Yeah.
when you live on the farm like I do, I tried towing a Kubota because I needed to get it from this house to my son's. And I'm
Right.
telling you, that thing, it was
Yeah.
sounded like a Great Dane,
Yeah.
trying to needed something to eat.
Yeah.
Um,
Exactly.
but and I realized then and there I needed something a little bit bigger. So the 3500 coming to the house
There you go.
very soon. I
That'll
mean,
be
you know
cool.
what? For me, it's more about reliability and what you can do with it and what you can throw in the back because
That's
somebody
right.
always needs something from one house to another. Hey, can you bring this here? Can you do this there? And yes, folks, I do that.
Yeah. Well, let's throw it back to the Fed real quick. Jerome Powell.
Yes,
He played the utility player. He gave the market what it needed yesterday, and
he did.
said, "Hey, 2024, we don't." This was the first change in posture of the Fed. And what I mean by that
Oh,
is when
yeah.
you look at the dot plots, the dot plots now included some lower numbers. They lowered their target for inflation, or I'm sorry, for interest rates by the end of 2024 from right around 5% to down 4.1. So the Fed is now telling you, yep, you know what? The market was right. We're going to see lower rates. 4% is now in play on the 10-year after the announcement. And as you've seen, everything has gone up. You've seen housing stocks. You've seen the regional banks, Tom, go up 10% since that announcement yesterday. Anything that's been tied to inflation and interest rates is getting the benefit of lower rates in 2024. The other side of that, Tom, and I think this is where the magic happens for the market. Look at
Yeah.
the Magnificent Seven. They were actually lower, some of those stocks yesterday, lower on the day. That is telling you that we're going to see a huge, huge migration of cash in 2024 as people get out of those singular names that have
Hmm.
really been knocking the cover off the ball, and
Yeah.
they start to get back to work and look for some names that have been, we'll call them values in
Right.
2024 that are going to kind of lead the way higher. So I wonder if NVIDIA is going to be the leader that it was in 2023 and 2024. I mean, that's a stock that's priced for perfection. But the
Yeah.
overall
Yeah.
picture here is they are kicking 2024 off with some good news.
And one of the big things I've kind of noticed is, after what's interesting is that, and this, rates are going to go down. In fact,
Right.
it's already being predetermined. If you look at things like, I'm looking at SGOV today, and here's something that, kick that in and take a look at it. And here's something that just constantly has been up, tick, 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 tick. That thing down, that thing dropped.
Yep.
And
Yep.
I mean, it drops once a month. It drops once a month because they end up paying out that interest rate dividend. But here we are in the middle of the month, and we had a third of a percent drop. And
Yep.
the only thing I can attribute that to is the forward look on where interest rates are likely to go. And so that's kind of what we're seeing is, did they just drop that off because of forward look? And apparently, because if you look at SGOV, it's a 0 to 90-day bond, or a
Yep.
0 to 90-day bond. And so what does is it pays out monthly, but from what I can tell, it is readjusting itself to pay out less monthly going forward. And is it true? Is it just because the rates, or is it a bad tick that'll
I,
be
I
fixed soon?
I think you nailed it. It's a shorter term look right now. It's that short bond. If you look at the beginning of the curve here, we're going to see that move the most with these Fed decisions right now, right?
Yeah.
And that is going to be, you're right. I mean, it's a 45-degree angle that drops off every 30 days when they pay that dividend out or that cash out to you, and then goes back up again. That's going to lose a little bit of its slope, I think,
Yeah.
here
Yeah.
for the next couple of weeks, if not next couple of months. What's
Mhm.
not going to lose its slope is look at the other end of that yield curve as a result of the Fed. Look at the long bond, TLT. TLT is trading up today 2.5%. This is the
That's
20-year
it
straight.
right there. That
Yep.
that is it right there. I mean, TLT's at what, 98 now?
Yep. It.
Off of 83, 6 weeks ago?
Yep.
I mean, for a marketable security, that's the thing to have been the buyer of. And by the way, folks, that really led the rally in November.
Yeah.
TLT led the rally. TLT was the one telling you things are going to get better.
Yep.
And it certainly did in November. If I were to just show a quick let me throw my screen up there so that everybody can see
Yeah.
this. This is a 1-year chart, CJ, but right in here, and let me make it real apparent. Right in here, there's your end of November. There's your pop in bonds. This was when the Fed came out and they did that last rate hike. and we were all saying to ourselves, it may be over, it may be over. Well, the bond market was definitely telling us this is done. And so from 86 up to where we are right now, it's just been kind of a nice steady climb. And if you take a look at that, you take a look at the stock market, this thing was telling you the stock market was destined to go higher in November. And of course, it's been accelerating here the last couple weeks.
Yep. That is also that bottom that you're pointing at. That's where Bill Gross and Jeffrey Gunlock and all these guys came out and kind of hung their hat. You know as well as I do, Tom, every once in a while, some of these gurus, some of these analysts will make a call of the century type of thing. And
Yeah.
they did that when they said the bear market for bonds is over. That was right at that bottom.
Take a look at
And
this. So you have the 19th, 20th, 21st of October, where the bond was hitting TLT 83, 83, 83. That was it. We had that
Yep.
pop up. We had a little bit of support, but then it just started running. But this all started on the 19th. Now, if you take a look at, let's just look at SPY. Here's SPY. Here's SPY on the 20th. SPY still dropped to new lows at the end of October, but the bond market was already rallying. The bond market was already saying, we're done. It's over. You had a bit of a long squeeze here. All right, where a lot of longs got kind of taken out at the end of the month, and then the rally came, and we just haven't looked back since. I mean, we've had a week where we went sideways. It happened at the very beginning of November. A week where we went sideways. We've had some sideways action for the last the 2 of the last 3 weeks, but that's okay. That was actually something when we came into December. You and I, Chris, said, hey, it's going to be a little bit of, it's going to be a little bit of choppiness going on. Well, we saw that choppiness. It actually happened from Thanksgiving all the way to just last week before we started accelerating. And we said 460 on the S&P. 460 is going to be the resistance area. Well, guess what? This week, we busted out of 460, and here we are above 470 now. As we've gone, and yeah, I mean, the big candle for the week has been Wednesday when the Fed made their announcement that they were changing, kind of doing a little bit of a course correction, and noticed some significant differences in the economy. Those words were used, and that's what really pushed that market higher. You just watched it in a Wednesday afternoon. After 2:00, it's like someone stepped on the gas pedal.
Yep, absolutely. And you know what? Going back to that long bond, Tom, you and I talked 2 weeks ago about the TLT and 100. For the technicians out there, and you don't need to see a chart to know this, but we broke through the 200-day moving average yesterday on the TLT, and we took out the August highs. So you now have a new high in bonds. You now have a new high in the S&P 500. You've got new highs happening all over this market. And you know what? You look at gold, Tom. You and I have been talking about gold. Gold's getting ready to break back to its new highs here. So this is just everybody jumping in the pool for 2024.
Yeah. And speaking of assets, Bitcoin, which hit 44,000 last week, dropped back down and got very close to 40,000. And everybody thought, okay, here it goes. Here's the big pullback. That didn't last long. I mean, all of a sudden, as soon as the Fed made their announcement, back to 43. And so I think that, as we head into the rest of December, I think rest of December is going to be no news equals good news. That's what I believe is we're going to be seeing for the remainder of the year. And I'm going to confirm that with something we're going to talk about next. But, you're right. I mean, gold is sitting on all-time highs once again. I mean, you look at the price action that happened right after the Fed announcement. Gold's up almost $60 an ounce. When's the last time you saw gold up almost 3% in one day? I don't know.
No, I don't either. The other thing, and this is everybody starts to scream about this. Remember the last time that the dollar went into a bear market trend? I mean, it was years ago.
Yeah,
right? We've seen the dollar just continue to go higher. That's your magic there. A lot of people look at that and go, "Oh, the dollar." And you and I talked about it because, when you're traveling abroad, the weaker dollar, what happens here and this versus the stronger dollar. But the market likes a weakening dollar. I mean, the market looks at a weaker dollar for a number of reasons as something that is a bullish fundamental catalyst.
yeah,
And today you've got the UUP, which is that index that marks the dollar, breaking through that same 200-day moving average I just said about bonds. So it's going the other direction.
it
This
is.
it's one of those weird things where I hate to say it because I look at sentiment very closely, and I like to be a counterintuitive contrarian. Sometimes you just get out of the way of the market and you go with the trends here. And I think this is one. If you're looking, and I like throwing out little ideas, I love right now the UDN, which is that bearish dollar index. It's an easy way to just pop an ETF. You go long bonds, you go short the dollar.
Hmm.
You feel a little unpatriotic going short the dollar, but nonetheless, it
Well,
works for
you know
us.
what? For years now, the Europeans, the folks in Asia have had to deal with the fact that their currency just hadn't matched up to ours. And
Yep.
so, globally, they're seeing a sign of relief, a little sign of relief right now.
Yep.
So let's talk about 2023 and what we did right and what we did wrong. Chris, I'm gonna pop this over to you first. So we made a few calls in 2023, and you were looking at them again. And tell us a little bit about some of the stuff we talked about this year that worked.
So I got to, I pull out the legal pad. I don't want to show my face, cover my face up when I'm saying this. I looked at the last 6 months or so, Tom, and just at a couple of the things that you and I have been writing and covering on the podcast. And the things that really stood out is when things got hairy in the middle of summer. We talked a lot about seasonality as we headed into August and the
Hmm.
seasonality that happens, August and September being bad months, October being a good month usually. And that played out a little bit differently. But specifically, I started lowering the microscope. And I was a little, I shouldn't say I was shocked, but I was. In August, August 8th to be exact, when I look at the receipts here, you and I talked about the regional banks, the KRE, and how those regional banks with the 10-year treasury, the TNX, heading up towards a 4.5%. And it felt like, this was the hottest stock. You talk about sentiment. You looked at the regional banks. It led the QQQ at that time. I had to get that from something I wrote for us. It was actually returning better than the NASDAQ 100 and the Magnificent Seven over a 3-month period. And it just felt a little bubbly. And at the same time, rates were coming up. Man, you and I came out on August 8th and talked about that. The regional banks went down 20% from that point. We're within a week or so of that. So, man, I look back at some of the stuff that I'm really proud that we kind of alerted people to, and that is absolutely top of the list. Another one that was just recently on November 7th. So it's within recent memory, let's call it. You and I sat here and talked about how, yep, the S&P 500 has now got some traction. The cubes have some traction, or the NASDAQ 100. But we need to see some of these interest rate sensitive areas like the regional banks, like the construction companies, the home builders. And we specifically called out the ITB at that point on November 7th. Money Calendar was in line with us because it was giving us that bullish outlook, as well as the sentiment. You remember, everybody was talking about how housing had to crash. Well, not if you get a hint of lower interest rates. And that's what happened here. Since then, Tom, 23% on the ITB. So, man, we just nailed that one. And then October 20th, I have to say, you and I were looking at not only the money calendar, but the VIX and a few other indicators, as well as that was right after we saw interest rates go up to 5% plus on the 10-year. And that was a point where you and I kind of said, hey, man, this feels like it's a little overbaked to the downside.
Yeah.
The money calendar kicks in. Usually we see a November. I remember specifically you and I talking about, hey, we've got to see a little bit of a comeback in October. And then the first week of November has to give us some positive results. And then it's going to be, Katie bar the doors because this market's going to go. It's exactly what happened. So 3 really good calls, and I'm just looking at the last half of the year. I mean, you and I have been nailing it all year long, and I'm really proud of that. I mean, it's been a lot of fun, but
Yeah,
also
yeah. I
something
mean,
that
you know what? When I looked at the money calendar, we're going to take a look at December here in just a few minutes. But I went back and I do this every year. I go to the end of the year. I say, what do I do? What did I do right? What did I do wrong? So let's start with what I
Mhm.
did wrong in terms of seasonality. I mean, February we lost it. February was flashing green, but if you take a look and see what happened to the month of February for the stock market, it did not go green at all. We did get a pullback in February. Now it picked it back up again in March, and the money calendar was spot on in March, in April, in May, June, July, August, September. But again, October came around, and the money calendar was kind of about, you can say it was a big L in October as well. I mean, nothing's 100%. We all know this.
No.
But I'm a pattern guy, and I'm going to follow stuff in thick and thin if it has that long term robustness to it. But yeah, so out of the 12 months, we really lost February and October. We come off the seasonal railroad tracks. We won every other month, even in August and September. When the markets dropped, the money calendar predicted the drop because we saw a lot of yellow, a lot of orange, a lot of red on the screen. There was more of that than there was green, so it was predicting pullbacks then. November, we absolutely killed it. So you're correct. If you take a look at November, and you know what, let me do this. Let me bring up. We'll bring the money calendar to the stage, and I'm just going to go backwards to November, and I want to show you what we were. For those of you who missed it, this was what Chris and I were talking about. We
Yep.
said, man, there's an entire, all the way up through Thanksgiving, green, 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 green. I mean, almost everything is bullish. It went up into the high 90s in many cases. And what I mean by that is that 94, 96% of what was on this screen when we went and tapped on any of these days, 96% of the stocks that were coming up were bullish, had bullish seasonality. So it was really painting a very interesting pattern for the month of November. Now you come into the last part and we start seeing a little bit of yellow and red coming into December. And here we are. We were talking about this last month before Thanksgiving. Chris and I were, and Chris was yielding to me. And I said, yeah, you know what? December looks like it's going to, because we started to look at the month, and I'm going to bring the entire month up with everybody right now. So here's December of 2023. And I said, well, we've got green, but we've also got a little bit of orange, a little bit of yellow on the screen. So we're going to see a little bit of this that's going to happen. And then things should start to kick into the upside once again. So if you look at the 13th, for instance, this was the day that the Fed decided to change their posture. Let me tell you, the 13th is typically not a good day in December when you look at the bullish to bearish ratio. Hey, it was a bullish day on the 13th. It happened, and the Fed made it happen. But let me just show you what we see happening after this. We see green all the way until you get to close to the end of the year. Going forward, next week, all green. The week after Christmas, for the most part, green. And that's because I think what happens is we're going to get that retail sales, that all those procrastinators, present company included, have to get out and spend some money, whether we already have that money or whether we're going to charge it and worry about paying for it later. If we don't do that, we're going to definitely pay for it later, especially if you're a husband or a father. If you don't go out and spend that money, you will pay for it later.
Yeah.
And that date will be Christmas Day.
Yeah, absolutely, Tom. You know what? What does it look like? This is just my curiosity. If we click it over to January now, can we get a little?
Yeah. So you
Because
want to
I
look
know
at
everybody
January.
out
You
there
know
is
what?
going to
We're going
say,
to talk about January 2024, but let me throw January
yeah.
2024 on the screen. I don't even have them loaded up yet. That's the
Okay.
mystery. But let me tell you this, CJ. If we look at January 2023, all right. Now it isn't going to be exact because some stuff has changed. But look
Right.
at what happened last year. Last year, we came out of the gate, and you can see here was now the first falls on a Monday. All right, the upcoming. But last year, the first fell on a Sunday, so we observed it on Monday. So we still had that Monday off. And
Right.
here comes the third Monday of the month. That's going to be a holiday again, just like it was last year. Earlier this year, it will happen again next year. So if you look at this calendar, it's going to be pretty close.
Yeah.
Here's what I have. I have a lot of green on the screen right now, and if the Fed is really posturing to hold rates steady and possibly start lowering rates in 2024, we might be pretty close when you take a look at something like this.
I am looking, and you just said something that's important, because now we're in this period where the Fed is going to be something that everybody's going to be watching even more closely. I don't know when the first meeting is for the Fed in January, and we will see
I don't
one.
think there's one until February, I believe.
I am going to tell you in just a second. I can't believe I don't have this right
So-
up on my calendar.
so
January
as you're-
30th.
Say again?
January 30th.
Okay,
Yep.
so I was closer to February
Yep.
than we knew. But okay, so that's going to be that Monday, which is that'll be the 5th week.
Actually, 31st and the 1st. So we're both right here. It straddles.
Okay.
It goes right across January into February. Yep.
Yeah, so the Wednesday, the 1st will be probably more than likely be the Fed decision day, because those
Yep.
typically happen on Wednesdays.
Correct.
But anyway, yeah, so we're going into a January that looks like if it runs the course of what it did this year, next year looks like it should be a bullish. There's bullish seasonality going into January. You have the January effect, all right, which is whatever happens in the first week of January, the entire month should be the same. All right, so goes the week, so goes the month. What else do we have going on? It's an election year. And you know what happens with election years? I'll give you a little hint here. Election years, guess what? What's the government going to be doing during an election year? They're not going to be doing a whole lot of governing. They're going to be doing a lot of campaigning, and that's good for Wall Street. No news out of DC is good news in New York and Chicago. And so, but why is that? Well, because you got people in office trying to stay in office. That means they're going to be buying votes. That means that they're going to be trying to put together some kind of, because the American public, let's face it, and I'm putting myself in this with it. I'm not bashing the American public. I'm part of the American public. We have short timers disease. It is the government is going to do the ruling wing in office right now, which we both know is 50-50. But if you take a look at what's going on in the executive branch, they want you to forget about inflation. They want you to forget about all the problems. They want you just to be reminded of all the good that's done. So they're going to try to make those problems, those inflation problems, those high rent problems, they're going to try to make that go away.
Yep.
How do they make that go away, CJ? Well, what they do is they start they want to buy these votes to get reelected. So they're going to start spending more money on public works. They're going to start spending money on maybe health or medical programs. Dare I say tax breaks? They're going to be looking at gas prices right now. These clean energy folks that want to do nothing except talk about clean energy. You know what they're going to be talking about next year? Oh, gas prices are down. They're down as low as they've been. I mean, they are down, but they're not down for the reasons that we all think they are. No. They're down because interest rates are higher, because the dollar's stronger, and because we really have been pushing clean energy so much that it may be taking a toll on the demand for fossil fuels. But fossil fuels are going to be talked about in the election year, and they're going to be talked about how cheap they are. And look what we've done for you, because that is their job. Their job is to get reelected. They're going to be pulling every little tidbit of good information out and passing it along to me and you.
Yep.
So election years are typically good years. We went back and we looked, if we want to talk about 2024 for the remainder of our program, if you take a look at 2024, 2024, if you go back to 1933, all right, the first 2 years are typically weaker of a 4-year election cycle, and the last 2 years are stronger. We just came out of what is the third year of the 4-year cycle is typically the strongest year. That's because you usually get a bounce off of potential weakness, which we had. You get typically a double-digit bounce, but the third and fourth years, the first 2 years, on average, the market's gone up about 6%. The third and fourth years, it's closer to 12%. So we're in the third and fourth years. We're in the election year right now. So what does this say for 2024? It says that we're likely to be stronger to kind of slide up into the election cycle. That's good for stocks. That's good for commodities. Okay. It should be good for Bitcoin. So, you look at the long term, the long term says that this is an up year. And so where do you put your money? CJ, where do you put your money in an election year?
Well, in an election year, I put my money in the things that are going to, be on the platform, if you will. And in this case, you pointed out infrastructure, usually your infrastructure stocks. And that can be everywhere from a Cemex, the concrete company, all the way to Trinity Industries, which they make guardrails and rail line type of cars. And right now, I got to say, you know what? A lot of people didn't see this last week, Tom. The Biden administration announced that they want to make houses affordable.
I saw that.
For everyday buyers, not your 1%ers, not your 10%ers. They want to make it below the median in terms of income and such. So they're rolling out this program where you can, get help buying a house. And that's always the thing that strikes with voters. It's the American dream. So in that case, I don't think you typically look at maybe picking out one of the companies, Lennar, Toll Brothers, because we all know there are some expensive home builders in there. But you buy something like the ITB, which we just talked about earlier. You buy something that's going to benefit. Now, keep in mind, inventory is coming online quickly in the home builders. When I was in Florida playing golf last month, I was amazed at how many houses were at 25 to 50% finished. And all of that's going to be coming online here over the next 3, 6, 9 months or so. So watch it, because the builders have been swinging hammers for months trying to get to this point. Where I look here, Tom, look at the Zillow, look at Redfin. Look at the place where people are going to be buying those houses.
I think you're spot on. I was going to say, if you're going toward the home building industry, I think it's a bit of a gamble. Go to the advertisers, because they're going to need them now more than ever.
That's
because
right.
I live in the bubble, the Florida bubble, and
by
so
the transaction is basically,
I live in Sarasota, Bradenton area. And it's funny because last week we just had the two biggest topics that we were discussing last weekend at the dinner table was the PGA tournament that was playing pretty much in my backyard, over the backyard on the other side. We saw all the oldies. All the oldies were out playing. Looked like there was the who's retiring soon.
Right.
I haven't seen VJ Singh on TV in forever, and yet he was here. And so, I look at him and Colin, what's his name? I don't remember. Anyway, they were all here playing. That was the first thing. The second thing was the number of houses that are just everywhere and that are being finished. My nephew just bought his first house, just closed on it this week. He just went under contract this week. He's going to close next month. Went under contract, new house. There's a lot of new construction. Like you said, it's finishing up right now. These guys, they're not stupid. They're smart. They're looking at interest rates and they're creating the D.R. Hortons. I know D.R. Horton's doing this. They have their own financing department.
Yeah.
PJ, they're able to come in and say, you know what? Average rates at 6-7%. We'll do 5. We'll do 5.25 to buy our house. So they're pricing in that 5.25, which I think, by the way, 5.25 right now is a great rate. I think in another maybe 2 years, they're going to be happy they did 5.25, because they're going to be making more money than on that interest. Then they'll be able to sell that note to someone else.
Right.
at sometime down the road. So yeah, I mean it's and what is it? 99% of all mortgages get sold in the first month anyway.
Right.
D.R. Horton may be in that business as well. So we'll see. But that was the second thing that was going on is there is a lot of inventory out there.
Ton.
So if you're looking at houses and you look at the housing market, I'm with you. I think that that's the area you want to go. One of the other things that I look at too, CJ, is that real conservative strategy, the dogs of the Dow.
Yep.
And so, I look at the dogs. Now, I'm a fan of the dogs. My dogs, the dog of the dogs for this year was Walgreens. I mean, I think that thing dropped 35-40%. It's showing a 9% dividend yield coming into 2024. I don't believe it. I do believe they're going to cut their dividend.
I do too.
But the one that shined for this year out of the dogs was Intel. Intel, and this is the why you have to do, when you do a strategy, if you want to match what that strategy or that research team is doing for you, you have to do the whole thing. You can't cherry pick. You can't say, I'm going to take Walgreens, but I'm not going to take Intel, because if you did that, you didn't do well this year. Intel trumped Walgreens and helped move higher. But, you look at 2024 and you'll see stocks like Verizon on there. And I'm looking at the cheap ones, Dow Chemical, Cisco, Coca-Cola. And to me, these look like defensive plays. When you look at the other dogs that are down that were the more expensive ones, Chevron's on that list, IBM's on that list, Goldman Sachs is on that list. I mean, Goldman Sachs is a dog of the Dow, pays a 3% dividend right now at the levels it's at. And I think that as interest rates go down, definitely Goldman Sachs is in that list of the Dow of the dogs. Goldman Sachs, in my mind, is the big winner.
Yeah, Goldman Sachs is big up there. You know what? I'm going to throw one out there for everybody. I wrote about this last week, Tom. Everybody loves AI. Everybody loves income stocks. Take a look at IBM, man. IBM is giving you a 4.6% dividend yield. It's at the heart of what's going on with monetizing AI because it's a service company.
And it is a dog of the Dow.
It is a dog of the Dow.
IBM is a dog. And you're right. I was just going to mention IBM. I see that over 4% dividend yield. I'm like, really?
4.6%, stocks up 23% for the year. It's not doing Intel numbers, but give it time. As we move away from the idea of AI being, a chip, which is what everybody's focused on now. They've recognized that Microsoft doesn't, even Microsoft and Google and everybody's talking about, well, we'll have a chip too. But IBM is just going to sit back and say, we're going to provide services. It's less expensive. You don't have to develop stuff. It's relationships. IBM's excelled at that. And I've said it before to you, man. I mean, Watson was the original AI.
Yeah. I think IBM, if I were to pick any of the dogs of the Dow, the two on my list, if I were to cherry pick, I don't like cherry picking. If I were to cherry pick, I'd say Goldman Sachs and IBM are going to be the clear winners of dogs in a steady or falling interest rate hike. You got dogs of Dow, which is a safe strategy. It's been a safe strategy for decades now. You got an election year we're coming into. That's going to help propel the markets. January seasonally looks good as we start the year out. I mean, what else can be said? Any final words about what you see for 2024, CJ?
Yeah, one just crossed my head, Tom, because every stock we've looked at, I just looked at Goldman Sachs. It's up 6% today. IBM, it's down because the Magnificent Seven's coming down a little bit. I tell people, you know what? Maybe this is one of those points. If you're looking at the regional banks that are up 10% over the last 2 days, the IWM that's going to be up 8 or 9%, don't feel like you got to jump in here in the next couple of days. We got to remember that the Fed just goose stocks pretty good, right? But don't chase things too high over the next few days. If you're listening to this, on December 15th, 18th, 20th or so, man, there's going to be an opportunity after things cool down. Don't be part of those people that just say, I got to move my money in right now. I just missed the last stop on the train. No, you're going to have an opportunity. You're going to have an opportunity to get GE, Goldman Sachs, maybe when it pulls back through. There are a lot of traders in this market that will start taking profits either right before the end of the year or right after the end of the year. Remember, the tax loss harvesting is done, right? They're trying to put a lot of that money back to work. And when that runs out, you'll get a little 5% pullback here and there. Pick your spot wisely is what I'm saying. Don't get all, oh my gosh, I've got to go right now. You're going to have your opportunities over the next couple of weeks.
I think so too.
Yeah.
CJ, always a pleasure. We've been doing these things for the better part of 2023. It's exciting.
Yep.
We're going to take a couple weeks off and hang some stockings by the chimney. Throw back a little eggnog.
Tom,
this will have a little more hot sauce in it than others.
Get what I'm making for dinner. I sent the family the dinner menu for Christmas night.
Yeah.
And we're doing fruit de mar and the 7 fishes. So
the 7 fishes.
We're doing the 7 fishes this year. So it's going to be an Italian style at the Johnson household.
That's pretty cool. And you know what? I have no idea. You know what we're doing? I hope, cross my fingers. I've been telling my wife, I said, cater it. I wanted her to cater Thanksgiving because I hate seeing her slaving. Thanksgiving dinner, everybody gives thanks, but no one gives thanks to the wives that put these things together, which is my wife and my wife's sister puts these things together every year. And here comes Christmas, and I know what's going to happen. She's going to be dog dead tired at the end of the night, and I'm going to have to drag her by her feet to bed. And so, I said this year, let's just cater. Let's cater. She was on board with Thanksgiving, and all of a sudden, someone changed her mind. And here we go. She goes, I'm never going to do that again. I said, that's a definitely, I'm America's pattern trader, and that's a pattern you continually say. I'm never going to do it again, but you keep doing it again. Here comes Christmas. I'm looking for catering ideas. And, I've got 9-10 days to go. And I gotta find something that is Italian approved. And that's the problem.
Yeah.
Nothing is Italian approved.
Yeah. My advice to you is,
just stay out of the way, right?
I'd stay out of the way, my friend, because, as that person that likes to do the cooking, there's something about, even though you're dog dead tired at the end of the night, there's something about sitting on the couch with a big full belly, watching everybody smile and laugh and have a ball. And, after they've had a great meal. And I'd get out of the way. I'd go to the Publix for her is what I'd do for you. Make sure you get the list.
Yeah. Yep. All right. Well, you know what, CJ? Enjoy the holiday season. Merry Christmas. Happy New Year to you.
You as well, my friend.
And Merry Christmas, Happy New Year to all of you that have been enjoying our podcasts here through 2023. We hope to see you again in the coming year. Thank you, everybody. Take care. We'll see you soon.
Bye, guys.